talking about IT, Wipro posted a very weak set of earnings this quarter. The revenue is coming in line, margins missed the estimates. Sajid caught up with the top management. Here's a slice of that interaction.
If you look at the overall demand environment, it has not really changed. And if you look at the way we see the demand coming in, significant piece of the demand is in cost optimization and vendor consolidation. The clients are taking the cost out so they can implement in the new AI projects and programs. Having said that, reflections on Q1, and if you look at our overall sequential and year-on-year growth, on year-on-year we had a 0.9% year-on-year growth, and clearly if you look at 3 of the 5 sectors have actually grown again year-on-year. Now, specific to Americas, if you look at it, technology and communications has shown a double-digit growth. If you look at in the context of consumer, we have won good amount of deals and we see very positive momentum around that. And if you look at BFSI in Americas, right, we see a good progress happening there. If you look at from a Europe perspective, they have again shown a year-on-year growth around that, and we see momentum coming up. And there is a good pipeline that's building up. And if we were to pick up countries like UK, Nordics, I think Nordic as a region, we see traction going on. And if you look at APMEA, it's done obviously a double-digit growth, and we continue to see a good pipeline and growth momentum around that. So net-net, if I were to reflect on the bookings, we did $3.3 billion bookings, out of which we had $1.6 billion coming from 13 large deals, including Mindsprint. I think the point that you're asking me is how does it move forward? One is it's very important we convert these deals into revenue. That's going to be our focus. Second, we are closely monitoring the discretionary spend, a little bit patchy at this point in time. But having said that, as the clients bring in more budgets into AI spend, I think that's where we are going to shift our focus on. And most of the wins that I talked about is on AI, impacting our clients, reimagining their processes, because you have to have the client context to understand their domain, understand the process, and then implement AI. And we are seeing good traction on that aspect of AI as well. Sajid.
You're given a guidance of -1.5 to 0.5% growth for Q2 on a quarter-to-quarter basis. It comes to around 2,574 to 2,672 million dollars in revenue terms. Are you seeing a revenue deflationary impact of AI on your top line? And when you speak about the kind of audible TCVs that you have garnered in during the quarter, which is $3.37 billion, what percentage of that has AI built in them?
So, Sajid, broadly, if I look at a very broad context of AI, I think it's a structural opportunity for the industry and for Wipro. Having said that, I think what we have baked into our Q2 performance is more around how we see the discretionary spend. As you know, we give only quarter-to-quarter guidance, which is like you rightly called out, -1.5% to +0.5%. Having said that, some of the sectors, for example, if you look at BFSI Americas, we're seeing good traction. We also had some good deal wins in EMR segment, especially in Europe. And we see, because EMR has been soft for us traditionally, and we see some uplift coming up in that context. And APMEA obviously continues to grow despite some of the geopolitical situation happening in the Middle East for us. The net is about how do we translate our bookings to revenue. And when I talk about bookings, there are bookings that we have done a few quarters back, and some of them are picking up right now. I think that's going to be our focus. And as far as the discretionary spend and AI is concerned, impact of AI, for example, if I call out software development lifecycle, there's a lot of productivity gains that we can get. Again, it depends on what kind of software development lifecycle you're in. If it's a very green field, as let's say Python, you get a significant productivity benefits. But if it's a brown field where you have to do modernization and and the target environment, whether it's deployment or for production, is not that modern, obviously the productivity benefits will come down. So that is some software development life cycles, AI is giving a significant productivity. So the size of the projects and the number of human effort that we need to put has dramatically come down. Similarly, whenever we do run and operate, whether it's application management, infrastructure or business process, again we deploy agentification. That also brings in a lot more productivity benefits for us as well as for our clients.
Margins at 15.64%, it's fallen quarter on quarter. What went behind them, and were you able to manage the currency volatility in this?
So I'll just at a very high level, the margin at our MSI that we gave last quarter had an impact on the margin, and second, we are also investing for the future, especially the AI native unit that we have, our innovation centers that we are building globally, our ecosystem partnerships, and so on and so forth. Aparna can give a little bit more color.
Volatility, rupee depreciation did give us benefits. As you know, we do take long-term hedges, and they, therefore the complete benefits will flow through over a few quarters.
Okay, and what about the efficiency gains? Were you able to bring in those gains in your margins as well?
Like Srini explained, our margins are a reflection of three factors. One, the salary increases that we rolled out last March. Second, the investments that we are making on AI. Three, the ramp up of some of the large deals that we've spoken about that typically come with lower profitability. And then, of course, offset by the rupee benefits from the rupee depreciation.
And what would be the comfortable level for margins for you going forward, at least in FY27?
We don't guide for a margin. We've earlier stated that our aspirational band is to be between 17 to 17.5%. Obviously, in this weak revenue environment, we have rolled out salary increase, so it will take us some time to bounce back. And we have levers which are in place for us to be able to drive that execution.
Aparna, just a clarification which I need with respect to your tax rate in this quarter. It was around 22% versus 25% in Q4. Is there something in it? Means we're seeing a trend where last year also Q1 had a lower tax rate. Can you explain? Is there a unusual element to it, or is it a normal accounting which is happening?
Effective tax rates are best judged for the whole year. If you look at the whole of last year, we operated at an ETR of 23.5%, and our endeavor is to obviously keep it as competitive as possible, but a normalized tax rate, as you know, should be closer to 25%.
Saurav, there's a wage hike that has been taken in last March, and that impact is seen here. What about the addition in manpower from an absolute number point of view? Quarter to quarter, the number has come down by 800 odd numbers. But what I see is that you have been adding sales and support staff. Is that the trend that we are going to see in FY27?
Sajid, the overall headcount has actually gone up by about 800 people. That includes the colleagues who have come on board from Mindsprint, about 3,300 odd people. The support headcount is a function of those people coming into that classification has happened. So it's that's the reason for you seeing the headcount going up. But overall, if I look at without Mindsprint, the headcount has slightly come down.
What kind of additions are you looking at this point in time, and what is the kind of training or skill enhancements that you're looking for your workforce, and what kind of investments are you making on that?
So, on the upskilling and training, Srini spoke about why and how we are looking at AI and the entire gamut of technology investments which we are making across to upskill our people, working with them into different levels of expertise, along with our partners and training them to get deployed on our projects. But from a headcount overall addition basis, it will be very, very demand specific. We'll as the demand environment improves, we'll look at it. Currently, supply side is we are confident that it will not be a constraint from a demand perspective.
All right, that's the management of Wipro.